All right, so we've got the February 2023 housing market update for the city of Edmonton. We're going to be looking at the most recent statistics available from the Realtors Association of Edmonton. So that's going to be using the January statistics. We're going to look at the market as a whole, then single family, and then the condo market. And I'm also going to show you some benchmark price changes and how that's adjusted. The Realtors Association of Edmonton has made some changes to how they are displaying some of their stats. So there's a few things in my infographics that are a little messed up right now, but I should have that fixed hopefully for next month's update. And of course, if you like videos like this, make sure to like and subscribe so that you never miss another video. Okay, so let's jump right in. Looking at the Edmonton market as a whole, currently in Edmonton, we're sitting at an 18.35% absorption rate. So we're still right in the middle of a buyer's market, not a huge change there. If you look at how that has changed over the last 12 to 13 months, you can see we've been staying pretty consistent in terms of what the balance of the market is. Since September, I'm not seeing any big swings making it more of a buyer's market or more of a balanced market. Since then, in September, we were sitting at 18.52%, and now we're down 0.2% in terms of the overall balance. So that's almost a unnoticeable change in the balance of the market. Now, of course, that is looking at just the market as a whole. So there's going to be different pockets of the market where there will be some bigger changes, but the market as a whole, generally speaking, is just as balanced as it was before, although it's balanced right in the middle of a buyer's market. Now, if you look at the history, I've said this in multiple other videos, but you might be, chiming in for the first time here. Things really picked up last year, starting in February. Even at the end of January, it was just on the cusp of going from a buyer's market to a balanced market. And then in February, it shot right up into the middle of the balanced market. And by March, it was a seller's market. It then started to come down through April, May, June, July, and then sort of leveled off once we got into September, and we've been bouncing around 18 to 19%. So still a buyer's market, but it's been pretty stable. So anybody that's really been expecting the market to get worse, so far it hasn't really been playing out that way in terms of the balance of the market. Now, the average price was sitting at $353,824 for the month of January, which is up 0.86% from last month, but down 6.31% from January of last year. This just shows you the month-over-month change in average price, and it is kind of all over the place. You'll see there was a big increase in February last year, and then it was bouncing around since then with a pretty significant drop in August and another one in December, but going up a little bit in January. Now, I would really take the average price with a grain of salt. I prefer benchmark price in terms of actually seeing how real values are changing. It's still a little bit of a lagging indicator, but average price can get skewed by people just, reducing their buying power and buying cheaper properties instead because they can't afford more expensive properties. Doesn't necessarily mean the more expensive properties lost that amount of value in drop on the average price, but if people just start buying cheaper homes on average, that'll bring your average price down. Okay, so if you look at the average price trend for the year, so far it's down 9.13% for the year, but we only have 1 month of data, so I wouldn't really look at that too closely. And active and sold listings, we had 3,837 active listings at the end of January, and there were 704 sales. So the number of active listings is up 4.52%. Not a huge increase, but bit of an increase from December. And then year over year, it's up 9.32% from January of last year. So that's actually a good thing because last year we were getting really tight in inventory by the end of January going into February. So I'm actually happy to see a little bit more inventory compared to last year. Inventory does kind of feel low though in a couple areas for sure. Now sales are up just 1% from last month and down 26.21% from January 2022. So what does that mean? Well, we have a quarter less transactions happening than we did this time last year. So in terms of number of transactions, that's a pretty significant drop, but things were pretty crazy last year. If you look at the stats here, there was 954 sales and there was 3,510 listings. Now we're sitting at 3,837 listings and there's 704 sales. So we have a little bit more listings, like 300 more listings and 250 less sales. So it's a pretty big difference in terms of the balance of the market. And then last year, if you look at February, we shot up to over 1,600 sales. And then in March, there was over 2,300 sales. So we'll have to see. I'll be keeping an eye on this. If you're in my real estate group, which you can join, it's a Facebook group. If you go to edmontonhousingmarket.ca, you can punch in your email and get an invite to join the Facebook group, where I go into insights and as I'm seeing things change in the Edmonton housing market. So head on over to edmontonhousingmarket.ca and you can sign up to join that Facebook group. But if you've been looking at the weekly updates in there, I've been showing that the sales have started to jump up a little bit on a weekly basis. We're a little behind on the weekly updates, waiting for the association to come out with another one. But if that trend continues, they'll probably continue to go up as we get more into the spring market. I'm not expecting it to go as crazy as it did last year. If it did, that would probably be a surprise for a lot of people though. So moving on, the average days on market sitting at 65 days in January, whereas it was sitting at 59 days last January, and last February, it was sitting at 35 days. So just to show you how quickly the market shifted last year, it was 59 days on average in January, and then it dropped all the way to 35 in February, and then stayed in the 30s until July. So it's definitely creeped its way back up there. A lot of that is normal seasonal change, but there's also obviously been a pretty big shift in the market due to all the interest rate increases. So 65 days on average. Now the market distribution for the whole market, just under 23% of the market is under 200,000. Then about 18.5% of the market is between 2 and 300,000. Just over 24% between 3 and 400,000, and just under 18% between 4 and 500,000. After that, there's almost 9% between 5 and 600,000, and about 3.4% between 6 and 700,000. Then there's 2.7% between 7 and 800,000, and then less than 1% for every price bracket after that. So that's it for the market as a whole. We're going to look at single family next. I already mentioned the Edmonton Housing Market Facebook group. Go to edmontonhousingmarket.ca to join that group. And then you can also send me messages and ask me questions and stuff like that as well. So we're still growing the group. Definitely recommend that you join. Let's take a look at the single family market. So the single family market, absorption rate's actually lower than it is for the market as a whole, sitting at 16.57%. So again, right in the middle of the buyer's market. You see an even bigger swing in terms of how this market shifted in the last 13 months. Really started ramping up in January, February, went absolutely insane for a while there. March was pretty crazy too, and then it really started to slow down from there. But again, since August, September, we're not seeing big changes in the actual absorption rate. So that means the balance of the market between active listings and sales is staying relatively stable so far, okay? Now the average price was sitting at $449,082, which is down 2.41% from last month and down 0.55% from last year. Won't spend too much time on the average price here since I already talked about that. It says it's down 7.61% for the year, but we only have 1 month, so not really useful. That'll get more accurate as we get further into the year. Now the number of actives, there was 2,336 active single family listings at the end of January and 387 sales. So the number of listings is actually down 5.65% from December, but up 53% from January 2022. So that's a big difference in inventory levels for single family titled properties compared to January of last year, which again, I think that's a good thing because things were obviously starting to get tight by the end of January last year. Now with the sales of 387, that's up 5.45% from December and down 32.81% from January. So there's about a third less transactions than there was in January of last year. And this just shows you the balance of the market again. January last year, we had just over 1,500 listings and 576 sales. And now we're sitting at just over 2,300 listings and 387 sales. So big difference in the balance. And as you can see, February and March were pretty dang tight in terms of the number of listings versus sales. But again, the balance, not seeing a huge swing since August. That stayed relatively stable. Even though the number of listings is dropping, so are the number of sales. So therefore, the balance has stayed pretty much around the same. Now, the average days on market for single family is sitting at 64 days, which is up from last month when it was 55 days. and January last year was sitting at 52 days. And again, if you look at February through June and July, you can see that the average days on market was like way down, under 30 days, until we got into July when it bumped up to 35, and it's really slowed down since then. We'll see how that goes as we get into more of the spring market. And then for the market distribution, hardly anything under 200,000, 2.33%. 14.2% between 2 and 300,000, 28.9% between 3 and 400,000. So that's actually the biggest segment of the market. Not surprised. Definitely a lot of people that want to buy in that price range, but it is tighter in that price range if you're a buyer, because everybody's trying to get the most for their money, keep that price down, and so you have other people competing with you for properties in that price range more so than when you're higher up. Between 4 and 500,000 was 26.87% of the market, and between 5 and 600,000 was 14.21% of the market. After that, just under 6% between 6 and 700,000, and just over 4% between 7 and 800,000. After that, less than 1% for everything, except that there's 1.81% between 1 million and 1.5 million. I guess that's kind of cheating because that's a $500,000 range. All right, so that's it for the single family market. If, in case you hadn't noticed already, or maybe it's your first time watching, I am a realtor here in Edmonton. I'd love to help you out if you're thinking about buying or selling. If you go to booktrevornow.com, you can select a time on my calendar for a free 30-minute strategy call with me. You can use that time to ask me any questions you have whatsoever about buying, selling, financing, the Edmonton real estate market, what you should do, advice, anything goes. I'm there to help you for those 30 minutes. There's absolutely no obligation. I'm just basically hoping that if we click and you like me and you end up buying or selling sometime in the future, that I'll be the agent that you decide to work with. But there's no obligation. I just want to help you out. It's a great way to get started. I can probably give you a lot of clarity by talking to you on the phone. Yes, you can learn a lot from my videos speaking generally, but when I get to talk to you on the phone, I can give you way more specific advice based on your unique situation. So go to booktrevornow.com, select a time on my calendar, and then I'll call you. Or if you'd prefer, you can always call me or text me at 780-819-5508, or email me at trevor@trevortardif.com. Just one F in Tardif. All right, so let's keep going. We'll take a look at the condo market next. So the condo market was sitting at an 8.95% absorption rate, which sounds pretty dang low. Now, like I said, they've been adjusting their stats at the Realtors Association, so I'm a little skeptical of how the stats are coming through, but you know, January and December are pretty slow months generally. So let's see. So that was a pretty big dip going from December. We were sitting at 17.86 down to 8.95. So we'll see what happens when the stats come in for the next month, but that seems like a pretty big dip in terms of activity. So maybe it was just a slow month for condos. Anyways, the average price for condos was $170,448 in January, which was down 1.82% from last month and down 10.33% from January 2022. That's the 12-month history on average price. Looking at the actives and solds, there was 1,442 active listings for condos at the end of the month and only 129 sales. So that right there pretty much shows why the balance changed. The number of active listings in December was sitting at 1,476, and then it was 1,442 in January. So the number of active listings barely changed, but we went from 261 sales in December to 129 sales in January. So maybe that's a fluke. You know, it's only 130 properties or so, but when you're only selling that many, it makes a bigger impact on the total balance of the market, at least on that month. So the actives are down 2.3% from last month and down 19.76% from the same time last year. And the sales had a 50.57% drop from December, and also a 51.69% drop from January of last year. So it's down from last month and last year. But the number of condo sales versus the active listings has been relatively balanced, again, up until this month. Average days on market's been sitting at 81 days versus 71 days last month and 76 days in January of last year. Vast majority of the transactions are happening under 200,000, with 75.97% of the market below 200,000. And again, this is, I wouldn't be shocked if the stats are getting inputted a little bit wonky right now. So take what I'm showing you here on the condos with a grain of salt. They did separate apartment condos from row houses and stuff, so I might have just the apartment condos in here, which would explain such a significant drop. So take those with a grain of salt. We'll see after we get that worked out. Like I said, they just changed the way that they did a couple things. Now, the other thing I wanted to show you guys was a couple stats just from Realtors Association of Edmonton. Looking at the city of Edmonton here, you can see that they've broken things into all residential, detached, semi-detached, row house / townhouse, and apartment condominiums. So all residential is basically what we already looked at, and then we looked at single family, which should include detached and semi-detached, and then condos used to include row and townhouse and apartment condominiums, but they've kind of split them up a little bit. And I can see right here the average, they had 170,000 for apartment condos. So what I wanted to show you guys here was benchmark prices. So the benchmark price trend, we're sitting at 360,000 for the month of January in Edmonton, which is down 1.5% from last month and down 4.8% from last year. You can see how that trend went over the last year. Essentially, it ramped up and peaked in April kind of thing, and then started coming down from November, December. It sort of went sideways, went down a little bit more in January. It's a bit of a lagging indicator, so I wouldn't get too caught up on individual months, but what you see happening with the overall trend is definitely useful. The single family home benchmark price was sitting at 422,000, which was down 1.6% from last month and down 4.4% from last year. Apartments, 170,000, which was down 0.4% from last month and down 3.6% from last year. And townhouses, the benchmark price was 215,000, which was down 1.2% from last month and down 4.8% from last year. So that pretty much wraps it up for the February housing market update here in Edmonton. I can tell you, even though some of these numbers don't look great, I'm certainly very busy with a lot of buyers right now. So there's definitely people out there buying. I like to recommend to a lot of people considering listing, it's good to list near the beginning of the spring market, so you've got time to get all those buyers as they come through the spring market. There's not a ton for buyers to choose from in certain segments of the market right now. So if you get your property on there, you might have a better chance of selling it now than later when you have a lot of other listings coming on the market. It's still too early to tell how the spring market is going to play out. And I've said this before, it depends how many buyers we get and it depends how many sellers we get. And it feels like there's a lot of sideline sellers and a lot of sideline buyers. So as we get into the spring market, I'll be sharing more of my insights and seeing how that balance of the market is shifting or if it's staying relatively stable like it has for the last 4 or 5 months. So I hope this video was useful. Make sure to reach out to me if I can help you in some way, and like and subscribe. If you click over here, you can subscribe, and if you click over here, you can watch another video. All right, thanks so much for watching, and I'll see you on the next one.